Good morning and welcome to the early bird. And the ADP figures in the US tonight, Wednesday, they will set the scene for Friday's employment figures. So just keep an eye on those. If those are positive, then the Friday will be positive. If they're negative, it'll be negative. But to a degree, they'll also be priced into the market as well. Okay, so that's that. The PMI figures were down last night in the US, and so the manufacturing figures. So that's a bit of a negative there as well. But also the Greece scenario is still unfolding, and weakness is creeping in. Now, in terms of the Elliott wave count here on the Dow Jones, this is the daily chart here. There is a couple of ways to count all of this pattern, basically, in terms of down for one, back for two, down for three, back for four, and down for five to make wave one, and then the wave two rally here, and then we go down for wave three. The other way to count it is this being down for one here, then an A and a B and a C here for not that quite simple, but a rally to this point here and down from here. Now, whichever way you look at it, it's a bearish scenario. And what we're looking at here now, this move that's coming down through here, when we'll have a look at that in a moment, is nearly in five waves. And if we get five waves in the change of a direction, so we're coming down through here, we were going up, of course, and when we get a change in direction and we get five waves in that direction there, then what happens then in Elliott terms, if we get five waves here, then we'll get an ABC counter trend back up for wave two, and then we'll get another one down. So, it may just be an ABC correction of an A and a B and a C down to here, and then we move up from there. I don't think that's the case, but I don't like to rule things out as well. But what we can look for now in terms of trading and analysis is that we are going to be looking at five waves down through here. They're not finished yet. It'll take another session or so. And then we'll be looking for an A, B, and C, a three-wave structure to the upside. And that's what we're going to be focused on, because once that ABC is finished, then we'll look to short from that area there. We don't want to short here because we'll only get trapped in a move coming back up through here. So we can just relax and wait for that to fall into place for us. Why we're in the bigger picture here as well, the medium level here, 11,500 here, is really the sort of support area, I guess. So in a way, that's what we'll be retesting. And the five waves that I was just talking about are probably likely to come down into this sort of area here as well. Now, there's a few numbers here. The 11.5 is the main game here. It's a medium level. Then over here, we've got the 772, which would be a very important point here. It's moved through that at the moment, but there was still more work to be done at that number. And of course, the other number, a few other numbers, would be 11,800. So 11,800 and also 11,650. So the main game is 11.5. The next important number is the 11.8, then the 11.772 and the 11.650 would also come into play. They're numbers that you can use as support and resistance to trade off. You don't want to be on the wrong side of those type of numbers. So let's sort of drill down into here. So we'll be looking for five waves down, three up, and then moving down. And what we expect is to move way down through here, because look, even if this is wave one here, we've got an A and a B and a C for wave two here. Wave three is going to be longer than this move here. But I think what we should be doing is we should be counting this five waves here, this 1, 2, 3, 4, and 5 into here. So if this is all five waves here for wave one, and that distance is there from that high to that low there, that distance there, well, the wave three that we're about to embark on this side over here is going to be longer than this distance from this low here back up to the 12.8 up here somewhere. It should be extended and further out as well, but we'll take one level at a time, one step at a time with that. So okay, looking at that, what I just mentioned then, so from this rally up through here, we're looking at 5 waves coming down. Yeah, so 5 waves to make wave 1 here, and then wave 2 to come back. Now, don't worry about these lines that I've drawn in here. They're just to give us a general idea. Don't think that, what price is that, so to speak. We'll be looking for this 5 waves here to finish. It may be lower than this. It may not come as low as this. It doesn't really matter. We'll just watch it play out, and then then we'll be studying this structure coming up through here. We're not interested in trading this one up here. We're interested in shorting coming down through here. So in this structure moving up through here, we'll be looking at an A and a B and a C wave. The A wave should have 5 waves in it, the B wave 3 waves in it, and the C wave 5 waves in it. So in that C wave with the 5 waves, we will look at the last tiny structure of that. Of course, we're in Australia, most of us, so it's going to be sort of odd hours there, but this area here will be worth shorting. So also with the A, the B, and the C wave up to here, wherever it goes, we'll work it out. But wherever it goes to, it's not, we can get the last little wave and short it, and all that's fine, but it's always nice to corrections. There can be 12 different types of corrections. But normally in the 1-2 here, they'll be sharp and swift and pretty simple. So we'll just get a zigzag in there. But what we're sort of looking for in terms of shorting is that once we get up, once the ABC is finished, and what we want to see then once it's finished is we want to see 5 waves down and then 3 back up. A little bit like what's happened over here. So we see little 5 waves down in here and then back up for wave 2 there. It's a little bit hard to see there, but it might be easy to see on the Nasdaq there. So if we have a look at the top in the Nasdaq there, just as a sort of an example, you can see that we've got this 1, 2, 3, 4, 5, and then we've got that ABC back up there for wave 2. That's the kind of thing that we're looking for, and then we'll look to short in this sort of area here, and looking to, depending on what levels that will be around, we'll be looking to do that as well. Yeah, so I mean, one of the good news is in shorting, in the long-term short for the US markets, we should be able to capture the stronger US dollar as well. So the S&P 500 is the same as well, just mapping out those 5 waves in a little bit more detail to see where we're sort of up to with everything. But look, basically, we're in this wave 4 here. You know that wave 4s are normally the most complicated. It may just be simple in terms of an A and a B and a C here, but it may not be that simple either. This ABC that we're looking at here, this 3-wave structure here, that may be just the A wave, and we could get a B wave down to here, then a C wave back up, and then we go down. So we don't normally trade wave 4s as such, so let's just allow that to play out, come down here, find its support here. If that, it probably is wave 4, then we'll be looking for 5 smaller waves coming into wave 1 here. Once that's complete, we'll be looking at this ABC coming back up. Now, the norm is the 61.8%. So from that high there all the way down to this low here, we'll be looking at 61.8%, which would be roughly around the 1260 here, and the 50% retracement would be probably close to this 1250 as well here. They're not so much important. What will be important will be the top of this wave 4 here. That will be important because there'll be sellers sitting there from last time. There would also be supply up here because there are people that have bought here, and also then the supply starts up here. So if it finds support on top of the 1230, then we have to look to the 1250, and if the 1250 finds support, then we need to look back up at the 72 here. The 61.8 retracement level, just double check on that. So if we take it down to here, that's what I'm sort of thinking, down to the 1200 there, that would give us, that's 50% to there, 61.8 to there. So that's what we'd be sort of looking at. But we'll, like I mentioned, we'll pull apart this wave 2 structure here, this ABC structure for that. Okay, you know, the other markets are all the same as well. Same old story. The UK market here, the FTSE. So this would be the fourth wave coming back up here. So we can look for a fifth wave to come down on the 53 here, the top of minor group 1, and we'll expect to bounce back off that as well. And once again, once we've got this wave 1 down here, we'll be looking for an A and a B and a C wave back up. And it's important to just focus on the actual structure itself. That's what we'll be focused on. And it's the same with the DAX as well. Same story. We'll see another fifth wave come down through here. Still looks, yeah, it's got more to unfold down through here, and then we'll see a rally. We don't know how far the rally is going to come back. It just depends on what news comes out, you know. Well, it's not even the news event itself, it's the reaction to the news, isn't it? So, yeah, same for our Australian markets as well, but we're a little bit different in Asia. So we've got a different scenario here. What we can say here is that there's a couple of ways to count all of this. There was the count where we could have this up for wave 1 here, and we're coming back for wave 2, yeah, and then we'll be pushing further to the upside. I don't have a lot of confidence in this particular structure that we're looking at for that to occur. But we won't rule it out just yet. But what we will do is we'll follow the internal structure. Even though we may not be sure on this bigger structure here, we can be reasonably confident of this smaller structure in here. And we'll look at that in a moment. Just to sort of complete this off here, we can have this down as wave 1 to this low here, and this is an A and a B and a C back for wave 2 here, and moving down lower from that. Or it can be counted as a 3 here, an A, a B and a C here for wave 4. That wave 4 there would be over there in that case, and then we'll have 5 waves coming down lower through here. So I don't know, it could be either of them, but we can focus on this short-term trend here. We can say that the 4,000, which is a medium level here, would be the support, and we'll see how we travel through that at that time there. So if we have a closer look at that for a moment. So this is what we're looking at. The same with, this is the 2-hour chart here on the SPY. We're basically looking for a 5-wave structure to come down through here, and we were looking at that yesterday as well. So it would pretty much line up with the other indices around the world, and I'll spend a bit more time on this before the market opens and put a chart up there. But as this is a 15-minute chart, we were counting this down through here yesterday, and it's still going down. You can see that one thing that you can see here that's important is this move here is in 3 waves, yeah? So it's done the retest of the minor group 1, and the 2 would become the pivot. As soon as the 4,200 here becomes resistance here, then the price belongs to 4,000 and will be drawn to 4,000 at that point. So it's just the people start thinking of it that way. That's all. It's just sort of a thing. But anyway, this structure here is corrective. It's in 3 waves. Sure, it could get bigger and uglier in terms of this A, B, C here could just be the A wave, and we've got a B wave and then a C wave, and then we go down from that point. But I think that we'll just pretty much keep this simple at this stage and come down from here. So we're looking for 5 waves to come down through here. And yeah, so really what you want to do is you want to be on the right side of group 2 here. So with group 2, you want to be the 41.72 as resistance there, so a retest there, and it looks like it's appealing that way now. So yeah, just give it some time there and just watch out for the squeeze on the open. And yeah, so okay, oil, some of the drivers here. Now oil's didn't quite finish its little 5th wave up there, but nor did some of the indices as well. So, but we just got to roll with what's sort of happening. And oil is just going to follow stock. That's the bottom line there. And so if that's going to be the case, we're going to keep unfolding to the downside here, that's fine. But in terms of trading, you don't want to be short while you're above the level here. You want to make sure that the market's it needs to give you the proof that you do have a resistance to work off. So you need to see the price come through the 90, probably hit the 88. The 86.50 is important too as a sub level, but basically banging back up against that there is resistance. As soon as you can recognize in your own mind that that's basically doomed there, then you can short it. The other important thing about looking at the resistance is bringing in the volume as well, because the volume creates the price, and you need to see less volume coming up as that's retesting that turn there. So you want to see more volume coming into the downside than to the upside. If you don't know how to read the volume, then have a look at in the education center and look at the first couple of videos in there on how to read volume. It's just two simple rules, and once you've got it, it will be a bit of a godsend really, because it does give meaning to the price when you're looking at it. Okay, the copper market is it's rolling over. I've got it on the 4-hour chart here just to bring up the bigger picture. Normally we're looking on a 15 or half an hour chart. Just have a look at the bigger picture here. This little wave structure up here, I've got to call that a failed fifth wave at this stage. So I'll leave that there. And look at the fact that we have 3 waves down. So at the moment, this structure, yes, you can count it as 5 here, but I'm just a bit reluctant to do that at this stage, because this fifth wave here, even though it's smaller than this one here, I think it's a truncated fifth wave, and I need it to play. Just need to stay with this for a little while here. But currently, if this is in 3 waves so far, so we want to see if this develops into 5 waves. If it develops into 5 waves, then we can look at these lows being taken out here. Obviously, this 300 here would be higher up here somewhere. So we'll see here. We'll see how we go here. But at this stage here, we'll just treat this as a corrective move. So it can still be in a bullish mode to the upside. Okay, we can allow it to come down into this little zone here. But if it comes under the 320 there, then it's doomed at that stage there. But of course, we'll pick the structure up before that occurs there. This should move with base metals as precious metals as well. Just going to give another, this is silver here. So we've had this strong wave come down through here in silver. That's definitely a third wave, and we've talked about that before, and we've been talking about this correction through here as well. This is a wave 4 correction through here, and it's pretty well done and dusted now, because when we look at this, the size of this here in proportion and ratio to this move that's come down through here, it kind of it balances out, doesn't it? Like there's plenty of time and price action here in relation to this move here. So it's overcooked. So if that's the case, then this would be a wave 4 through here. That would be the top, and we'll see lower moves coming through here. But that's not the count that we have on the gold market. But we just still want to look at this as a wave 4 to here, and then a move down through here. So once again, looking for 5 waves down through here, 3 back up, and then move to the downside. The real trade for here would come once we've locked under here, so to speak. But the gold can still have a move to the upside here. And here we're looking at that. We're on a 5-minute chart here on the gold. So I just wanted to break this down here. So when I was looking at this morning, I could see that that was important here, because here's the 1700, so that's the support there. And so at this point here, you can see that 3-wave structure there. So if you're going long in a market and you see that at a level, that you see this 3-wave move here, that's a bullish signal, and that will be taken out here. That high would be taken out. You would that's at the 720 there, that move there. So that's it's struggling there as you would expect it to at 72. So that's doing that. The 65, the 7110s here. So there should be, this looks like a little 4th wave. There should be another little push up there, and that should be done then. Then that would be like an A and a B and a C wave to that point there. Look, with this market here, the thing is that the US dollar pushing to the upside will put pressure onto this. But at the same token, we've got the indices moving to the downside, which will lift this here. So we need to, if you're going to trade this market, then you need to tune in the dollar, the indices, and this market here as well to pick up that. But the more interesting aspects is coming from the dollar, and this is ignited by the Bank of Japan's intervention. And but what we're looking for, we were looking for a low there, and I can get a count out of it, but I have to put that wave 2 in there now. So we're looking for, like the indices, we're looking for 5 waves up, and then we're looking for an ABC correction for a wave 2, and then a further push to the upside there. I think the best trade that will come out of this, if you're going to trade this market as such, these numbers are important. The, the 76.50, the 77, the 78, they're all important. But this is the supply level through here, and this is what it's struggling with at the moment. So what we could say is that if we see an A and a B and a C correction here, just like we looked at gold just a little while ago, that 3-wave correction, and then the price moving up, then we can go long here. And then we can do the same with short on the euro side. So with the euro side, there's also with Elliott, there's always a few counts going on, and you kind of got to look at them all as well. But in these 2 counts that we have here, there's just one direction, and that's down, and we'll be focused on that. Now, we have this is down for 1 here and across for 2 there, and remember we shorted from above here and all the way down through here quite nicely using the daily and the weekly robo. And that's what we can do again now as well. So we should expect this market to come in the longer term, to come down, to follow the S&P 500 and the US indices down. So once again, we're looking the same as well. We're looking for 5 waves down here and then 3 waves back up. So if we look at that on the bigger picture here, so this is the same as the Dow Jones and the S&P 500 and so forth. So we're looking for wave 1 to come into play down here, and then we're looking for wave 2 to come back. Now, look, wave 2, the norm is 61.8, but don't worry about that. Let's just follow the structure. So we've still got more to play out. We've got this wave 4 still playing out here. It can come back to the wave 4 of 1 lesser degree up here. It doesn't really matter. Let's just allow that to play out. Let's let wave 1 complete itself. Let's wait for wave 2 to come in, and then we will be looking to short it at this stage here. So give that some consideration in terms of this short. You may want to go long on the dollar rather than short on the euro as well. So give that consideration, but also work out, we can pretty much nail about sort of, the structure and where to get in and those sort of things. But if you're going for a long-term trend, then you need to work out how you're going to lay your positions into the market, and how you're going to unwind them, and where would you unwind them, and how do you go about it. It's easy to get things in the market initially, but once you take them out, it can be a bit of a psychological stopper to get back in again. So the euro is good to short because it normally has low retracement structures within it, so it doesn't bounce back much, as such, once you're in this trend to the downside. And once again, we're also looking at a third of a third. So if I come back to this is like down for 1 here and back for 2 here. But remember that behind this scene, we're also down for 1 and back for 2 again. So if I come back to here, what I mean by that is that from this, we've got down for 1 here, back for 2, and then we're down for 1 here, back for 2 here, then we're down for 1, and we're going back for 2 again. So we're in the third of a third of a third. So it should really pick up speed through here. Yeah, so that could be a pretty exciting trade if it pans out. Yeah. So on the short term with the euro here, you know that what numbers are going to be important. This has already played out here since I've been doing the report this morning. But the 13772 here, that whole area there is going to be sort of a tough one. Yeah. So, but this move up here so far, it looks corrective at this stage here. Where this move here looks like it's in 5 waves, doesn't it? So we've got the 1, the 2, the 3, the 4, and the 5. So we can expect an A, B, C, and rally back up here. This number will be important here. The other 72 here, not as much, but it will be. So once you see this have a correction in here, if it finds the 137 as the resistance, then you can use this subgroup 2 down here to as your trigger to go south. So you'd want this 72 here, this 13672 as your resistance, the 65 as a trigger to go short that way. You know it's going to bounce at the midpoint, the 50 here, but the idea would be to get much lower. So you'd be looking for a larger 5-wave structure to the downside, and this would be just 1, 2, 3, 4, and 5 to the downside, but it's a little bit too early to say, and you want the setup within here, so just wait for that. And you basically want the 137 as the resistance. If you're going to go to the long side, then this is all group 1 here, SG1, so 10, 20, and 30. You would want, now that we've got the first high above the level come in here, and the correction is unfolding through here, if it's going to go up, you want to be on support on this number here, on top of subgroup 1 here as support, and a retested support like this, not just a breakout like that. We don't trade the breakout. The retest is more important than the breakout. The Australian dollar as well, the RBA cut rates, so helped it along a little bit. But there's a couple of ways to count this to the downside. They're both to the downside. We could count this down for wave 1 here, back for 2, 3, 4, and down for 5 here. This looks corrective here, so it's probably not finished, and that would be the 1, 2, 3, 4, 5. So we're looking down here further, but a little bit like stock as well, I think that the trade will come once we've got this 5 waves completed down here, and we've got this ABC back up as well. But there's 2 counts for this, so have a look at our charts a little bit later on, and we'll work with that through there. In terms of scalping, then you're looking at scalping. So there is a money management course in the Forex section, the Forex Elliott Wave section there, on scalping for 9 points all the time, which is certainly worth a look. And matching that financial scalping plan up with the sub levels here is certainly a way to take money consistently from the market. So you'd just be looking for certain setups all the time of supports and little breakouts. So you'd be trading from one level to the next level. You only need to get sort of 9 points in this plan there. But coming back onto this appears to be corrective at this stage. This could get a lot more ugly than this as well, because this would be a little A, B, and C for the A wave, then an A, B, C for the B wave, and then we've got 5 waves up here for the C wave, which is not a good look, but that would be the 3rd wave in the middle here, yeah, and that would be the 4th and the 5th. So this can be up for an A, B, and a C to here, or it could be the wave 1 to here. So a bit dodgy, but we'll work with that. So this can be an A, a B, and a C here, but maybe just the A wave, and this is an A, B, and a C for the B wave, and we've still got another 5 waves to go up if that's the case. Then you would use the midpoint and the 72 as support and so forth. If this is to the downside, then it would be like this. It would be down for 1, back for 2 of 1 degree, then the next degree smaller would be down for 1 and back for 2. So you would find the 50 here, the midpoint, as the resistance, and that's what it's doing now. So if you give it time here, then you'll get the next trend. So it's either going to be support or it's going to be resistance. It won't be able to get back up through there, and then you could short it from that stage there. It's going to get bumpy in through here because people think 1, 2, and 3, there'll be orders sitting here. So you'll get something like this here. Such through here, but you want to try and get under here, because we'll be heading down towards the dollar down there further. So, and if you're short here, then you've got to keep the stop really up here further. Okay, that's it. So we're basically shorting. There's in the US markets, the wave count for them. We just need to wait for that wave one to finish and wave two to go back up, and then we can start shorting there. On our local market here, we can obviously we've got a few shorts in, and we'll continue to add a little bit more. But just realise that that we'll be facing a bounce in the Australian. Once this wave four here is complete and we get the wave five down here, the stocks will be the same. We'll get a bounce after that, so we can be short term short for a little while, but the better trades will come a little bit later on. Just finding our indices chart here. So right, this is where we are here. So just going back over this one here a little bit, it does appear that we've got wave one to here and wave two to here. Somewhere in here we've got wave three. This is possibly wave four here. So we'll go down for wave five, down to the 4100 area. But once we're down there, and it may be at the 4000 as well, just don't know yet how things are going to extend out. I'll need to do some more work internally on here. But once we do have this wave five down here, that wave five waves for wave one, then we'll have a counter trend back up. So those short trades that we have in the market, they're going to be stopped out. So while these are down through here, you might want to take consideration of locking in some profits on those short positions or any other short positions that you open up at, and then just sort of stand aside. So we can say that from 4.1 to 4,000 here, somewhere in here, we will get the wave two bounce, which will go on for a few days at least, maybe 3 days or something, I don't know, and it will be choppy and messy. So we're not really interested in that. Even really going long, we probably put in a few long positions for, just something to do. But it's after we get 5 waves down, we want to see 3 back up, and then we want to short from that point again. So we won't be doing any sort of weekly short trading coming down here just yet, but we will after we get the bounce off the 4,000 or here, wherever that may be, and we'll look to short there. So anyway, I guess what I'm saying is try not to lose money down here by mucking around too much. Do you know what I mean? We've got some shorts in, and we'll put a few more in, but we've got to get through the bounce, basically. That's the thing. So today's Wednesday. It could come Thursday, Friday. Thursday would probably be, if we're in a bear market, the rally will probably be on the Thursday. But we'll be able to have a look at the ADP figures coming out tonight as well, to try and figure out what's going to happen on the Friday as well. So anyway, all exciting stuff. So all good. Okay, that's it. Okay, so good morning and good luck.